Hi, Chase Craig here with Chase Craig Real Estate Group and Keller Williams Realty Boise. And today I want to talk to you about step 3 in our How to Buy a Home series, which is all about getting you more familiar with different types of financing that are out there to help you purchase a home. As you know, in step 2, you want to locate your real estate professional first. They should have a couple great lending partners that they work with in your area that they can refer you to. So again, they're the experts, not me. All I'm doing in this video is I'm going to familiarize you with different types of financing that may be available in your area. Now, real estate is obviously local, and I strongly encourage you to talk to your local lender that your real estate professional refers you to, because there might be programs that are only available in that area that a lender from out of state might not know about. So let's jump right into it. Here in Idaho, we have what's called IHA, which is Idaho Housing Associations. This is typically reserved for our first-time home buyers. Not always first-time home buyers, but typically that's who gets it. Now, to qualify as a first-time home buyer, you cannot have owned a home in the last 3 years. So that's pretty interesting to know that just because you've owned a home in the past doesn't mean you don't qualify as a first-time home buyer. If you sold a home 3 or 4 years ago and now you're buying a home again and you haven't owned one for the last 3 or 4 years, guess what? You're a first-time home buyer. The benefits of these programs are that you can purchase a home with zero down depending on your credit score and your situation. So that's one of the benefits and one of the reasons why we see a lot of people use IHA. FHA is a very, very popular loan. Typically requires 3.5% down, so that's 3.5% of the purchase price. An example would be if it's a $100,000 home loan, you're going to have to put 3.5% of that down, so $3,500. That's probably the most common loan that we see our homeowners getting. We have a conventional loan. This is typically going to require 5% down or more. A lot of people are going to try and put 20% down because you can dodge something called mortgage insurance premium. That's just an added fee that you have to pay if you don't have 20% or more in equity in the home. This is a VA loan. That's for our veterans of the country. Thank you for serving. We really appreciate it. This requires zero down, and you actually don't pay a mortgage insurance premium. You pay what's called a funding fee when you get a VA loan, and that wipes out you having to pay a mortgage insurance premium. So typically, if you had a VA loan with zero down versus a conventional loan with 5% down, you might actually see a lower payment with a VA even though you put no money down. So it can be a great loan. Again, discuss it with your lending professional. They're going to be able to tell you what's right for you. Up here we have what's called a rural development loan, and that's typically reserved for towns that are below 25,000 in population. They qualify for what's called the rural development loan. The great thing about this is it's promoting growth to rural areas. Typically requires zero down, so it can be a great home loan to get you started depending on your area. We have non-owner occupied homes. This would typically be if perhaps you're buying a home and your kids are going to live in it. Typically going to require more money down, usually around 20%. You have a second home. This is if you're buying a home, let's say you live in California, but you're going to buy a home here in Idaho. Well, you might get a second home loan because it requires less money down, typically around 10% down. And then of course you have investment property home loans. If you're buying residential property, you're going to look at 20 to 25% down to be able to purchase that investment property. So you might have heard the myth that you need to save up money to put down on a home. Well, guess what? We just went over 1, 2, 3 different options that require zero money down. Obviously, it depends on you qualifying and your credit score and your debt-to-income ratios and all those fun things that your lender can help you out with. I hope you've enjoyed this video today. If you need anything else, you know where to reach us. Have a wonderful day.